Good morning. Welcome to episode 16 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International. Today is Wednesday, March 3rd, 2021. Most of the activity in the metals markets last week was negative. We're down significantly from where we last spoke last week, so we'll get right to the pricing. Last week, gold was 1808.90. This week, 1723.30, down about 85.60. Silver last week was 27.87. This week it's at 26.62, down $1.25. Platinum 12.71 last week. This week 12.06, down $65. And palladium was the only uptick metal in the past week. Last week it was 2400. This week it's 2414. So gold, silver, and platinum all down around 4.5% to 5% on the week. Palladium was up 0.5%. The U.S. dollar index climbed slightly from 90.13 last week to 90.81 on the U.S. dollar index. And as we all know, that is still a number in a negative territory. It's a weak dollar signal below 95 on that index. What caused the move in the metals this past week? Well, it's mainly two things. One is the increase in the yields on bonds, so people are starting to think that maybe inflation is trying to creep in. On top of that, we're waiting the impending passage of a new stimulus bill, which is going to dump more money into the economy, and a lot of people feel that the future is optimistic as vaccinations start to take hold and things are going to start opening back up. I know they have in a couple states already. They removed all restrictions. So that optimism is fueling an idea that the economy is going to rebound and maybe we don't need gold so much. Critical thing I want to touch on here, because it comes up a lot, everybody thinks gold does well in an inflationary environment only. The reality is gold does well in inflation. Gold actually does its job in a deflationary environment too. And when the price goes down, does that mean that all of a sudden gold is not doing its job? No. In a deflationary environment, prices are coming down. Gold is a store of purchasing power. If that price comes down in tune with other consumer products and services, guess what? It is still preserving purchasing power. Gold actually does its role very well in both deflationary and inflationary environments. The other question that comes up is this the beginning of the end? You know, gold's down, 4.5% in a week. Same with silver. Is the bull market over? And I just got to remind you, we're so early on in this. We're in a consolidation phase. Nothing to be spooked about. We still haven't seen anywhere near a 10-year mark for a bull market, which is typical. We've not seen the gold prices exceed the previous bull market by 2 to 3 times, which is something we look for. We're looking for a gold-silver ratio, the number of ounces of silver it takes to buy an ounce of gold, somewhere in the 35 to 50 range. We're well above that at 65. We're looking at the sentiment, which is not positive, but it's also not overly negative for gold right now. The interest rates, maybe there's a little bit of fear there, but it takes many more of these factors to signal the end of the bull market than just one, and the jury's still out on that. The dollar is still weak, and you cannot convince me that we're anywhere near political and social stability. So this bull market is still alive and well, showing no signs of backing off at this point, and the smart buyers, the smart investors are out there right now buying well on these dips in order to set themselves up for success later. So let's just keep watching. Take advantage of this opportunity that's been given you. I don't know that it's going to come around too much more often in the future as we start to increase in value. Remember to subscribe to our YouTube channel and like us directly below this video. Also, you can below send us your comments and your questions, and we'll cover them on air so we can cover what's on your mind. In the description paragraph, you can follow us. You can subscribe to our newsletter and our alerts, and our next newsletter is coming out tomorrow. That's the March issue of Information Line. And don't ever forget that getting rich starts with keeping what's yours.